Good afternoon, everyone. I'm Michael. I'm going to be your host for around about the next 45 minutes. It's the first time running this session with you all, so it's a brand new topic in the webinar series that we've been running this one. We're looking at corrections, and specifically we're looking at stock today, so those stock levels and the cost prices that people tend to make mistakes with here and there. So looking at what options you've got if you do make a mistake. Right, now before we get started, just want to quickly run through a little bit of housekeeping, just for those of you that may be new to webinars. You've probably heard it before many times if you've attended a few of these. So as normal, you don't need a microphone for these sessions. It will be muted if you've got one and you've enabled it. That's done automatically. You can't unmute yourself. So any questions for me today, you'll need to pop them in the questions panel. You can submit those by clicking on the little speech bubble icon that's down the right hand side of your screen. If you give it a click, you'll have access to that box in the bottom right hand corner. So type your comments, your questions. It's just myself running the session with you today, so do bear with me when you submit those questions. Remember to click send as well. I'm sure we've all had it where you type up an email, you forget to click send, or if you're like me and you work on Microsoft Teams a lot, you probably type in a message and think, why haven't I got a response to that? And you've just been distracted. Click send. They'll pop up on my screen then. I'll try my best to answer as many of those as I can. As I say, just myself, so do bear with me on that one. If anyone wants a copy of today's slides, then they are available as well via the little link on the taskbar. They're not detailed by any stretch of the imagination or the slides. We try not to include step-by-step guides. It is just the idea of a webinar. It'll give you a basic sort of presentation, but mainly trying to concentrate on the demo itself. So if you want the detailed information about making corrections, have a look in our help center. That's where you'll find the in-depth step-by-step guides, just to guide you through that process. Now, as normal, you will receive an email a little bit later today. So I think when it's a new topic, we tend to do that 2 hours after the event. That'll be sent out automatically. So you'll get that round about, what's it going to be, about 4:15, something like that. 4:45 maybe, if I get my times right, that is. Yeah, about 4:45. So it will include a link to today's recording, so if you need a bit of a recap, it'll be on there. But there'll also be links so you can register for our other webinars, and also if you are wanting to watch recordings, there'll be a link to our full list that's available. So watch out for that one. Our timetable, incidentally, runs up to December. It's the week before Christmas that we're going to be stopping the webinars, and then we'll continue again from probably from the first week of January, starting on about the 5th, I think that is. Right, anyway, let's get started. Let's have a look at what we're going to be covering in today's session. So I'm going to start with products and services. I am going to be touching on stock valuation as well, and the scenarios that you've got available. So those common scenarios that people ask us about. So I'm going to cover them in sort of not too in-depth initially, but then I want to look at probably the most complicated part of correcting stock, where you may need to do adjustments out and adjustments in, depending on what options you use within the software. And then just at the end, I'll explain more about the additional support that's available. And if there are any outstanding questions, as I say, I'll try my best to pick those up. If I can't answer them during the session or we don't get a chance, then I'll just try and drop you an email at some point later this afternoon. Right, so let's get started with chatting a little bit about, first of all, products and services. So worth understanding, just sort of setting the scene a little bit before we get into corrections. So as far as products and services are concerned, when you set up your records, you're either going to have 2 types available to you: stock item, non-stock, or if you're on the professional level of the software, you'll also have a service item available to you as well. Now, there's virtually no difference other than categorizing it between non-stock and service. So you don't really gain anything between setting it to non-stock or service. But it's only records that are flagged as stock items, so available on all levels, that will track the activity of your movements of stock, so the ins and the outs when you update your various transactions. So whether that's manually amending it, or if you're doing it via sort of invoices and credits, for instance. So it's only those stock items that are going to actually do that for you. Now, as far as stock valuation is concerned, which is one of the key things to understand, and you'll see why when we start running through the various demos. So as far as stock valuation is concerned, there's a number of different sort of methods available, but Sage 50 Accounts uses what you would term first in, first out, or FIFO, as you might have heard it referred to. So there are different sort of descriptions, different methods available. You might have last in, first out as far as the stock is concerned. But with FIFO, it assumes that all the stock is sold first. So if you imagine you've got this sort of all of your stock in a line as you buy it in, the stock that's the oldest would essentially be at the front of the queue, and you would start using that first. And that's the principle behind that. Now, it's worth noting as well that with that, it's one of the important things, just in case you have a lot of movements coming in, is that it's actually the order of entry and not the date that is used. So if, for example, on that little screenshot there, I've got transaction 921, which is an AI, so an adjustment in, and that is actually dated 1st of October 2024. And then we've got that followed by another adjustment in, so transaction 922, and that's dated 6th of November 2024. Now, if those transactions were reversed, so say for instance I'd forgot to enter that one on the 1st of October, and then I go in and try to backdate that one. So I've already entered the November one, and I think, oh, I forgot that one from October. If I backdate it, the FIFO principle, the first in, first out, will be based on the order that those transactions have been entered, not the actual date. So that's something to bear in mind when you start using that. Now, there are a number of reports in Sage Accounts with regard to product valuation or stock valuation. Now, you'll actually only have them available to you by default if you're on the professional level of the software. I think that's just for historic purposes, but there are ways around that. So if you're on version 30, you will have, I'll show you these in just a second. When you go to run your reports, and if you are in the professional level, you will have a report, and it will let you choose between what we term last purchase price and the average cost price. Now, in this example, again, on the screenshot, you'll see the first transaction, transaction 921. The very last column that has a value on that transaction is £10. And the second transaction, 922, again, that's a quantity coming in. It's showing a cost price there of £12. So the last purchase price that will be held within the record would be £12. So when you're running a valuation, if you say, right, well, I've got 20 in stock, do you want that based on your average cost price, which will in essence be the actual, or are you wanting it based around the last cost price? So some people will use the last cost price almost like to value the stock with almost like a replacement cost. So if I needed to buy 20 of the same item again, I'm going to have to pay £12 a unit as opposed to that original 10 that I bought at £10 a unit. So again, it depends what options you use and which reports you use in Sage when it comes to your corrections. Now, with regard to reports, I just want to quickly pick up on this, and I'll share my screen at this point as well. just before we start looking at the various scenarios that you have. So I'll quickly share my screen. I'm going to pop into products and services, and I've got some items here. Now, if I just leave those 5 highlighted, these are my stock items. They've all got 10 in stock, and I think I've added them all at £10 each. Now, if I just pop into reports, and bear in mind that I am on the professional level, if we then go into the product valuation, we've got a product valuation report. Now, on version 30, the reports are actually combined. So you've got a product valuation and it says last or average purchase price. So when I run this report, as part of the criteria, it will ask me, do you want to base it around the last purchase price or the average cost price? Now you'll notice it doesn't ask me for a date there either. It's just what's currently in stock. It doesn't even matter if even if you've entered a transaction for December already, it would take that into account as well. This report is not date sensitive, this one. It's just whatever you've got flagged as being in stock, it will be included. Now on previous versions, so version 29 and earlier, if you're on the professional level, you would actually have 2 separate reports listed. So you would have a product valuation which uses last cost price, and you would also have a product valuation uses average purchase price. Now, if we just quickly run one of these, so we'll base it on average. So you can see, hopefully, if we zoom in a little bit, that we've got 10 in stock, and it's calculating that the average cost price is £10 a unit. I've just done one transaction against each of these five items. So it's telling me I've got a stock value of essentially 10 times the average cost price of 10, which is, in this case, 100. Now, because you don't have these 3 reports that are listed on either the essentials level or the standard level of Sage 50 accounts, you've got options. You could try and design those reports if you're au fait with the report designer. But you've also got the Send to Excel option. Now, if I just click Send to Excel, it just transfers the information that's on my screen. So if I drag that back so you can see that, can't really work anything out from here other than I've got the current quantity in stock for all of those items that were listed. But what you can do in your software, if I just close out of that, is if you right click on your column headings, one of the options that you can add onto your list is the last cost price. Now, again, because I'm on the professional level, I get last cost price standard, last cost price discounted. Just the standard one that I'm going to display, displays that for me. And that means if I now click Send to Excel, it should include that information. So essentially what I could do on this one is if I want to base it around the last cost price, I can just add an extra calculation in to get that type of information. So if I just did equals that times that, and then we could easily copy that down as well if necessary, put totals in, etc. So we can get at that information relatively simply, even if you haven't got the relevant valuation report available to you. So that's something that they sent to Excel, one of those little features that sometimes it's the easiest way to crack that big nut, to get at that information that you're after. You've got it just available just about throughout the software as well. So it's a good option to have. We get loads of queries saying, I need a report for this. And often just maybe displaying an extra column or applying a filter beforehand, and then just sending it to Excel achieves what you're after. Anyway, so that's the stock valuation report. Let's move on to some sort of scenarios and corrections, and we'll keep coming back and obviously using the software so you can see the impact that these corrections have and what options you've got available to you. So let's quickly pop back to my screen. Find the right option. There we go. What we'll do, we're going to pick up on our first scenario. So the first scenario, and this is quite a common one, this one, and it's where you've done an adjustment in. So you've gone into products and services, you've clicked the adjustment in option, and you've booked some stock in. And either you've put the wrong quantity in, or, and probably one of the most common sort of queries, is where you forgot to key in the cost price. So it would pick up a default cost price if you've got one entered, but if you've never entered one before, it would just default to 0. So you've booked stock in with a cost price of 0. Now let me just show you what impact that's going to have. So if I go back to my screen, we'll just base it on this stock item 1. So if we have a quick look at the activity first of all, and you'll see on this activity, I've got just one transaction. I've got 10, and I've booked it in with a cost price of 10, which obviously valuation wise, it's going to give me £100. But if I go in and I post an adjustment in, and I'll just use today's date, quantity, I'm going to say actually another 10. And this is where if I've put the wrong cost price in, so just to exaggerate it, I'm going to change the cost price to 0 on this one. And then we'll just save it. So what we've now got is I've got £20 in sorry, a quantity of 20 in stock of this first item. So we're having a look at the activity. We're in the same position as what we had on that screenshot a moment ago. So we got 2 lots of 10 coming in. First 10 have got a cost price of 10, and the second one, it doesn't have a cost price. Now, what that means is, if I were to go and now run the likes of a valuation report, so we'll run the same one, and if I base that around the last purchase price, so the last purchase price of that item being 0 in this case, the cost price, and in this case, it doesn't find anything because it doesn't have a value. If we run the same report, but this time we base it around the average cost price, what we're now going to get, let's zoom in so you can see that, we've got 20 in stock, but it's saying the average cost price for those 20 units is £5. So the original 10 times the unit price of 10 plus the secondary 10 that we've booked in, put it 0. So total value, £100, average cost price there is £5. Now, how would we go about correcting that? Now, I'm sure some of you have probably been in this position before. And there's a number of things to think about. So let's just quickly pop back to the slide. So firstly, do you use stock valuation in Sage 50 accounts? That would be the first question I would ask. Do you use stock valuation reports to value your stock? If not, then you haven't really got a problem, because you've got, as long as you've got the right quantity in stock, that's all you're concerned with. You're not bothered about the cost price. Now, if you do use stock valuation, then the secondary question is, well, was the quantity in stock 0 before the delivery? So before you've adjusted in, or whatever other transaction you've used to book the stock in, might have been via a purchase order. So was the quantity in stock 0 before that? Now, if it was, it's nice and easy. All you would do is you would book that out. So you would, whatever you've just booked in, you just book it back out. So you would post an adjustment out of 10 in this case. Just ignore that first transaction. We're going to say it's 0 beforehand. So you could book it out at just to essentially 0 it down. So 0 the quantity in stock. And then it would just be a case of posting your adjustment in again at the correct cost price. Now the other one for that, we'll come into this in a bit more detail a little bit later on, is if the quantity in stock wasn't 0, so in this example, we've got a number of options. And again, this is where it starts getting a bit more involved. You'd first of all adjust out, so you can knock it back to 0. But then when you come to adjust in, this is when you've got a decision to make. Do you use the actual cost price? So if it's a fixed price, that's great. I could just do, right, actually, I've got 20. I want to book 20 into stock at £10. But you might not have a fixed price when you've bought your stock. You might have a variable one. So it might be that the first 10 came in at £10 and the second 10, maybe they should have come in at £12. So this is where you might need to break your adjustments. You might need to break them down a little bit. So you might want to print that screen. Again, you've got the send to Excel option that you've got available. So just in this example, if we were to do a basic example where we just say, actually, we've now got 20 in stock, we just want to adjust them out, and then we're going to adjust everything back in. So let's quickly flick back to my screen. We'll get back to the main products list. This one here, that's the one I've adjusted in at 10 at 0. So we'll do an adjustment out. I'll use today's date. I'm going to say, right, I want to adjust out the full quantity that I've got in stock, which it shows here. And we'll just save that. So you can see on the list there, it's back to 0. What I'm now going to do is I'll do a further adjustment in. I want to establish that actually there's 20 in stock. Now you'll see that the last cost price here is still 0 from that when I've made that mistake. But I'm going to say, right, I want to book them in at all 20 in at £10. So just save that. And that rectifies the problem. Bit more complex if it's a variable cost price. And then you've got that decision, do you want to book them in individually? Or are you going to just maybe calculate an average cost price yourself and just book them in at that? So that's the first scenario. So quite a simple one, that one. We just booked everything out and then we've booked everything back in, just as one adjustment in. So full 20 at £10 each. So that would now correct my valuation report. So that's scenario number 1. Scenario number 2 is something that I covered in a little bit of detail yesterday when we looked at corrections for invoices and orders. And it's where you've entered an invoice and you've maybe updated it to the ledgers in error. So when you do that, if you've got stock items on that invoice, it'll adjust when you post it to the ledgers. You'll have a goods out transaction posted against that product. And again, it uses that first in, first out principle. So it's going to look at the first transaction on the list and it will use as much of that as it can. And then if it needs any more, if maybe the quantity available of that first transaction isn't enough to fulfill that invoice, it will move on to the next transaction, etc. If it is, then it will just adjust, do that goods out transaction, and it will use the cost price for the from the sort of the stock transactions that get used basically. Now in that sort of scenario, what options have you got? Now let's recreate this one. So we've got, in this case, we've got 10 in, or we've got the first 10 in stock at £10. We then got a 10 in stock, a further 10 in stock at £12. So we'll set that up first, then we'll do an invoice for a quantity of 6, and then we'll update that to the ledgers so you can see what happens, and then we'll look at the correction itself. Right, back to my screen then, and we'll base it on this one, stock item number 2. So if we have a quick look at the activity, you'll see that we just got the 10 at £10. So we're going to adjust in 10 more. So we'll do 10, but this time I'm going to, I've gone past it, I'm going to amend the cost price. So we're going to say £12 for these 10 that we just purchased. We'll save that. So we've now got 20 in stock, last cost price was 12. And if we run a valuation report on this one, so let's quickly run that again, just so we can see what that looks like. What we're going to do is we're going to base it on average cost price. Again, I want to try and get it a bit more in depth now, so you can try and understand a little bit more about the way that first in, first out works. So at the moment, we're saying we've got a quantity in stock of 20. The full stock value is £220. So it's looked at the actual cost price of all the individual transactions. So the first 10 giving us £100, the second 10 at 12 units each, 120. So 220 in total. So from that, it works out an average cost price based on what you've got in stock. So that's the key value there that we want to remember, 220. Right, what we'll now do, I'm going to pop on an invoice. So I'll choose the first customer, and then we're going to choose that stock item number 2 that we've just been looking at. And what we'll do is we'll say the customer's ordered 6 of those, that's what we'll invoice for. I'll save it. And then I'm going to say I've updated this to the ledgers. Now, just quickly do that. But I want to also say that actually I've done that in error. Now this will be the same if you've got a sales order, maybe you've dispatched it in error. So again, that was another scenario that we looked at yesterday. So either you've entered it as an invoice, you've updated ledgers, it adjusts the stock at that point, or you've done a sales order and you've dispatched an error, it would adjust the stock at that point. So you've got those 2 scenarios depending whether it's invoicing, you've entered it, or sales orders. Right, let's get back to products and services, and we'll just have a quick look at the activity just so you can see where we are. So this is same as what we had on the screenshot a few moments ago. We've got the booked in 10, and then we've got a quantity out based around that invoice that we've just updated of 6. So that leaves us with, in this case, we're going to be left with 14 in stock, which it tells us at the bottom here. Now, ordinarily, when if you've done something like that, so you've entered an invoice and maybe you've made a mistake, one of the easiest options is just to credit that invoice. To say, right, well, actually, I'll just credit customer number 1 with whatever updated in error. But something to be aware of is when you do a credit, which you can either use new credit or got this option of credit invoice, which makes it nice and simple. Pulls through the items, so same customer, same item, same quantity. I'm just going to credit them for the full 6. Because I've used that credit invoice option, it prompts me, do you want to update this credit note and allocate it to invoice number 1? So we'll click yes. Just saves me a little bit of work, that one. So I can see both of them are posted and they're going to be matched against each other. So as far as the customer's concerned, the balance is back to 0. They've had 1 invoice, they've had 1 credit. Now, if we go back to products and services, you can see that product A2, we're back to 20 in stock. But let's have a quick look at the activity. And what we've got for the credit note, it posts a GR transaction, a goods returned. So it's got 6. But what we've now got is it's used that last cost price. It's not going to look at which 6 it originally used. It's not capable of doing that. It can't say, right, well, the 6 that have been returned, it was these here that we used and it was that cost price. It will go off when it adjusts it back in. It will use whatever that last cost price is. So it picks it up from the record itself. So we've now got 6 booked back into stock, but at £12. Now, what impact does that have on my valuation report? Let's have a look. So we'll run it. We're going to base it around the average, which essentially looks at the activity to see what is in stock, the individual transactions that haven't been used yet. And if we just OK that, let's zoom in so you can see that a little bit clearer. What we've now got, because it's actually looking at the actual cost price of those transactions that are available, we've still got 20 in stock, but the average cost price now, rather than it being 11, it's increased to £11.60 because of that goods returned using the last cost price. So actually, my stock value on this report, it's gone up from 220 to 232, just because of the way that first in, first out works. So that's something to be aware of when you come to your corrections for invoices and orders, and maybe just stock in general as well. So again, we'll come back to that one in a bit more detail in just a few minutes' time. Let's close out of that for the time being. Right, let's pick up on the next scenario. And next scenario, I just want to, rather than specifically being a correction, I suppose, but you may come to points in your financial year when you do a stock take and you've got a stock take option in your software, and that makes it really easy to adjust your stock levels. So again, we'll base this around again against one of our initial products that we've already got set up. And we'll sort of set the scene again where we've got 10 in stock with a cost price of cost price of 10, and then a further 10 at a cost price of 12. So you've got that variable cost price, and it's that makes it a little bit tricky at times. Right, let's get back to my screen, and we'll look at stock item number 3. Just again, set the scene so you can see what's happening. So we've got the 10 at £10. Right. If we do the second adjustment in, so again, just use today's date, we'll do 10 at £12. I'll save it. So we're in the same position as before. We've got those 2 transactions. Now we've got a stock take option at the top here. Now this is basically used, rather than you do adjustment in and out, which is nice and easy anyway, you would just say, right, well, I've got 20 in stock, or that's what Sage does. When I've counted them, actually, I've only got 19. If that was the case, you would just, for the difference, right, I need to reduce my stock by 1. You could do an adjustment out. If you need to increase, maybe you've actually got more in stock than what your Sage is showing for whatever reason, then you could do the adjustment in. Stock take, essentially it does a little bit of the calculating for you. So it shows you the product, shows you your actual. So here, so it's always going to pull through whatever it's currently showing in stock. Cost price is £12. Again, that's the last cost price, that one. And in stock is 20, which we know, and adjustment at the moment is 0. Now, if I do the stock take, and for whatever reason my stock is, let's say it's less. So actually, let's say I've only got 18. There's 2 I can't find. So type in 18. It tells me, so it works out the adjustment for me. So -2 in this case. and I'm just going to click post stock take. Now, if we have a look at the activity on that one, what we can see is it's booked out for this transaction. So it's done an adjustment out transaction for that stock take. It's reduced it by 2, and it's used the initial stock. Now, let's say I found that 2. So I've gone back to stock take, and I think actually it should actually be 20. So pop that in, it should be 20. It's not 18. Maybe I've been standing on the 2 boxes I was looking for when I've done the stock take. Moment of madness. So we've actually got 20 in stock, so I just want to put it back to where it was. And I'll post the stock take. And again, if we go and have a look at the activity, we've got that adjustment in, and again, it's used that last cost price. It's picked that up from the record itself. So it's booked it back into stock with £12. So it's something to really be careful of and really be aware of when you are using the stock valuation, if you're using some of the automated options, or even if you're doing it manually. So I want to go through it one more time. And the detailed steps, if you need to make corrections to invoices or orders, they're all contained within our help center. It'll guide you through, it'll ask you the questions, and it should then give you the correct solution. So the final one I want to look at with you is scenario number 4. If I can find the right option, there we go. And again, it's invoices updated to the ledgers in error. So let's say you do use stock valuation in Sage 50 accounts. What options do you have? Now, the main thing is, does your cost price vary? Now, if it doesn't, your cost price, if it doesn't vary, and let's say it was just £10 all the way through, then you haven't really got a problem when it comes to posting the likes of your credit note, because it will book it back in at whatever that fixed cost price. But if we look on the screenshot there, you can see the cost prices has varied. So we got that £10 and £12. So in that sort of scenario, we've got other things to consider. So rather than post that credit note, and I'll quickly run through this scenario, what you would normally do if you'd done that in error would be to delete your transactions. So let's quickly set that one up again. We'll quickly run through that scenario for you. So this is, again, starting to get a bit more complex. Let's first of all adjust in. Again, stock item 4, we'll do 10. We'll do that at £12 again. And we'll save it. So we're back to where we were, where we've been for the other scenarios as well. Quickly enter an invoice. We'll do customer number 2. And it was stock item 4. Let's say I've used 6 of those. I'll save it. And then what I'm going to do is I'm going to update that to the ledger. So again, we can see, right, we've updated that one to the ledgers in error. So just okay that. Just bear me 1 second there, please. Sorry about that. Right, so we've updated that to the ledgers. So we're in exactly the same position as we were in earlier. Now, let's say we've done that in error. We think, right, we just want to delete it. We just want to almost like roll back, but we're not in a position to do that. We can't restore. It's not practical to do so. So we've got various options. Again, we could have just entered a credit note as earlier, but you see how it adjusted the stock. So let's say we want to get rid of this one. We want to sort of be in a position almost where that hadn't happened. So first of all, I'm just going to delete that invoice. Get rid of it. So it's gone. On the customer's account, I'll access their activity and I can see the invoice that literally I've just done there. So what I want to do for that one as well, I want to delete it. I don't want the customer to see on any statements or anything like that that I've made a mistake. So I'll highlight it, I'll click delete at the top, just confirm I want to get rid of it. And again, that's it done. Now, just in case you're not aware with these transactions, so where it says deleted SI, this one would appear in red if I had a different transaction that I could highlight. You'd see that one in red. If I wanted to hide that transaction, what you can do is just go into settings, company preferences, and just ask you for your password again. And then in parameters, I've got this little set option here, exclude deleted transactions. If I tick that box, so we'll switch it on, click OK. And then if I go back to that customer account, customer number 2, have a look at the activity and I don't see anything now. So the deleted transactions are hidden. They're still there in the background. I would still see them if I went into the main transactions list. But what I don't see is I don't see the deletions when I'm just looking at the likes of a customer activity, a supplier activity, or bank activity, that type of thing. It hides them from that activity window. Right, so what we've done is we've deleted the invoice from invoices and credits. It was invoice number 3, we've deleted that so it doesn't exist. We've deleted it from the customer's account, so the balance is back to where it was. But what we haven't done is we haven't done anything for this one here, stock item number 4. Now we've currently got 14 in stock. Now, if I use the stock valuation reports and I want to reflect the stock as it was before I made that transaction. This is where it gets quite cumbersome at times. Depends how many movements in you have. Then the option would be to adjust everything out. So I'll just do the adjustment out of the 14. So we're back to 0. So nothing in stock. And then if I have a look at the activity for that one, I'll be able to work out, right, both have been used. I should have had 20 in stock, so 10 at £10 and then 10 at £12. So I wanted to be back where I sort of was at the beginning. What I'd need to do is now post the adjustments in the order that they were listed. And remember, you can obviously from within the record itself, I'll just quickly pop back to that. Within the record itself, I could send that to Excel if I needed to. Break it, apply things like date ranges, etc. But I could send that list to Excel just to help me. But I've tried to keep it simpler on this one. So we just go back into adjustment in, choose our item, stock item in this case. Now I could backdate if I wanted to. I'll just accept today's date. I don't want to complicate it more than it already is. And I'm going to say the cost price of that original 10 was £10. I'll save it. And then I'll do a second adjustment in for the second quantity of 10. And that was at £12. So we're back to the original, sort of almost like the original position. So we'll just save that one as well. So we're back to having 20 in stock. Now that's quite a, depends how much activity you have, but it can be quite an in-depth scenario. You could have loads of transactions to book in and out. And again, you need to ask yourself those questions. Do you use the valuation? If not, then as long as the quantity is right, then you're all right, not a problem. So if you're just using it for sort of stock control and managing those levels, then you're okay, as long as that quantity in stock is correct. But if you're using it for stock valuation, This is where it comes onto the adjustments out and then adjusting back in, etc. But all of those scenarios are covered in depth in our help center. Now, I hope it hasn't put you off too much. It's still really simple to manage your stock levels with the various transactions in Sage. But it does bring us to the end of the demos. And if anyone has any questions for me, quickly please pop them into the questions panel. If you weren't quite with us at the beginning of the session there, all you need to do, click your little speech bubble icon. It'll expand. You'll get access to that box in the bottom right-hand corner. Pop in your question or your comment, click send, and I'll try and pick those up in just a moment. Help Center, great source of information for you. So those detailed articles, I think they were included on the handout for yesterday's session. If you were on the corrections for invoices and orders, you'll have those links. If not, they're very easy to find anyway. So just as an example, if I bring up my, let's say I bring up my browser and we'll access the Help Center. So we'll do sage.co.uk/help. Takes you to this page. We'll choose Sage 50 accounts. And then just in the search box, and I'll put, let's say dispatched. And I'm just a case of me looking for the right one. Now I could put more of a description or more keywords in there, but there it is there, how to reverse an incorrectly dispatched sales order. So it's just a case of going in, and then this one's even got a little bit of a wizard to try and guide you through that process. So trying to get you at the correct scenario, give you the correct solution as well. So it should be nice and easy for you to find. So do use that Help Center. So again, it was sage.co.uk/help. When you go to that page, choose Sage 50 accounts, and then you'll be able to start searching. To give you an idea of some of those webinars that we've got coming up, hopefully slightly simpler topics. Stock is always a difficult concept. Some people will be quite familiar with it, others won't be, and you might be talking about areas that you're not that familiar with as well sometimes when you're talking about stock. But loads of corrections in our webinar series. We've got bank reconciliation and bank feeds tomorrow. Bank transactions is, I think, the week after next. Also next week, we will be doing a rerun of invoices and orders, stock, and also the bank reconciliation as well. If you want to attend any of those, the links are included. If you've missed any of the other sessions, customers and suppliers, journals, VAT transactions, the recordings are available, and the link will be included in your follow-up email. Loads of other topics as well, so year-end, remote data access, or what's new in version 31, our latest version. That will be, we'll be starting those sessions next week. So not a great deal to see difference-wise in the core software, but it's almost being introduced to sort of pave the way for other changes. So available over the next 12 months. So again, if you want to see more, find out more about that, please get yourself signed up for a What's New version 31 session. Global changes, festive messages on your invoices, and also we're bringing back by popular demand the foreign trader option. So we'll be running a couple of sessions on that one in December as well. If you are interested, links are on your follow-up email. Now, I've got no questions currently, but let me quickly thank you for coming along. I hope you've enjoyed it. Remember the recordings available. So if you want to work through it in your own time, you've got the demo data, you've got the practice data you can have a go of. If you're on version 30.1, or maybe you've already installed version 31, not to be confused with 30.1 and 31, so slightly different. If you're on 30.1 or 31, then as far as the practice data is concerned, you can actually restore your own data into that to have a little play around with it. So if you want to do that, it's a great learning resource, that one, but it means you can have a go of things without actually impacting on your live data. Now, there will be a little survey pop up as you leave today. If you've got any thoughts, comments, anything that you want to share with us, pop it on there. Take a minute to do that. Always appreciate it. Love reading those comments just to see if we've hit the mark or not. And your follow-up email will be with you in, I think, around about 2 hours. But it will include the links that you need to get yourself registered. Still no outstanding questions. If you do think of anything once you leave the webinar, if you're like me and you think, oh, I wish I'd asked this, as soon as you leave the webinar, get in touch. You can reply to any of the webinar emails. Great information in the help center, and obviously our support team is on hand as well. So for now, we'll end the webinar. Take care, and hopefully I'll see you on some other sessions soon. Many thanks.